I'm not sure where to buy it from or which of the pairs to trade it with. Now, if I come on the chart right now, I decided through fundamentals that I want to buy a particular currency. Now, I'm coming to the chart to give me the one that has the best setup. Okay, so I always like to do this when I'm looking at the chart. I look at the most, I look at the highest time frame, because the highest time frame, like the monthly chart, gives me direction. It gives me the trend. If I check the monthly chart, which is the highest time frame we have on the MT4, we can now decide that, okay, this particular pair is going down. That's the general trend. But when it's going down, it gets to fluctuate on its way. So it gets to some point that are resistance and support. Let's do Euro JPY. Let's go to Euro JPY. Euro JPY is, let me remove some of these indicators so we don't get confused. All right, good. Let me increase this. Okay, so this is the monthly chart for Euro JPY. On a long term, we can see that each of these candles has a month movement within it. So it's a month. So it's more of a month. So since it peaked around November 2017, the trend has been down since then. So we can check our dates here. So we can have the timing of each of the candles as in you can actually get it from the MT4, from the MetaTrader platform. So beginning of 2018, that's towards ending 2017 stroke beginning, we've had Euro JPY trending down. And when the pandemic issue started, it's this, I bet it kept going down. But in the past 2 months now, because this is a monthly chart, so this is 1 month, this is another month, we've had Euro recovering. We've had Euro recovering, but we still have the general trend that's down. So if I look at this chart now, I could feel that, okay, there's been a retracement. There's been a retracement here. So we talked about support and resistance in one of our earlier classes. So I'm seeing a kind of resistance. Now, the prices got to these points here. It tried to go up. It got here, and then price resisted any further movement, and it started coming down. And then it got to this point again, and then it came up, and now we are around that region again. So I can say that there is a resistance around here, though there is a support around here as well. Okay, so it's like prices finding it hard to break this region down, and it's finding it difficult as well to break this region up. So if my sentiment for Euro JPY is sell, maybe because I'm looking at buying the Japanese yen, then I may wait for it to get to this support. To this resistance, then I buy. You can pick your lines here. There's a point here, you have horizontal line. If I click on it, I put it up here. You can double click to shift it a bit. I want to see my spot there. That's my monthly chart resistance, and this is a kind of support area. That's on the monthly chart. Okay, so the monthly chart has given me general direction, and I have my idea. Now, what I use monthly chart for is not to pick my trades, because it's just to pick my trend. What's the trend of this pair? Where is it going? I can see now that it's going down, and it's around a resistance area, which is strong, because if you have resistance on a higher time frame, is always stronger than resistance or support on a lower time frame. Okay, so we've looked at fundamentals. This is what we think we want to buy because of fundamentals. Now we're looking at technical. We're looking at the chart to see if it correlates with our analysis fundamentally, and if it's on at a region that we can buy now. Okay, so I check my lower time frame. Let me check my H1 and let's see what it's doing. Okay, so this is my hourly time frame, and you can see a big drop in the since this morning, because we are 10 a.m. already, and this is about 10 hours drop. 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 hours. So it started dropping from here and it came down, So on my hourly time frame, if I'm looking at picking, because I picked my trend down, I would prefer to pick my entry point from a point up there. So let me reduce this candle. Okay. So if I want to pick this trade, I would prefer to pick it. I won't want to pick it from here, except I'm buying, because it's showing me it's on another, it can bounce up from this end. So I won't want to buy, to sell from here. I would prefer to sell from somewhere around here. Okay. So I prefer to sell from somewhere around there. So if I feel that the trend is down, okay, and there is on the hourly time frame a support region around here, there may be a bounce off. So I won't want to pick my trade. I would want to feel that if it bounces off this point and it bounces back here, then I'll pick myself from here. And we talked about pending order. So you can actually put your price here and say that when it gets to this point, if it actually reverses and gets to this point, then you can pick your trade. And we treated it in one of our earlier classes too, how to set your pending order for entry. Okay, so let me assume I'm taking this trade and I want to set it to take this trade. If it reverses, if it bounces off this support and it gets to this resistance, I want to take this trade at 121.168. How do I set that? From new order, you will change market execution. You change it to pending order because you're not getting it at the current price. Okay, so I change it to pending order. So I change it to this. So 121. So you type in the price here, the price that you are getting, that you want to buy, that you want to buy it. I mean that you want to sell from. Sorry, it's not a buy limit. We are selling. We are selling. Yeah, all right. So it's a sell. Stop. Okay. So we are selling. We are not buying but we want to sell when it gets to this point. If it gets there. So sorry, we use sell limit because we are anticipating it to get here and then reverse. So sell limit. Good. Okay, so we have that point there. So our trade is there. This is our sell limit. So to minimize our risk, we can say that if it does not break, if it doesn't break this point and it bounces back, I'll prefer to come in from this end and follow it back down. But if it breaks this hourly support and you want to come in, because at this point I won't want to come in. This is not a strong support anyway, but if we are doing, if you're managing risks while we are trading, we can just employ some of these pending order rules and just, things to mitigate our positions properly. So we've checked fundamentals, we've checked some technicals, and we can enter a trade. Now, lastly, on just looking at those trade setup, let's look at gold. We've checked fundamentals. gold has been trading up as in for a long time, and it's on record high. If I minimize this monthly chart for us to see how things have been from gold, this is March 2005. That's a long time ago. Let me minimize it much further. You see, let me maximize a bit. So gold has come from this end, and it has gotten to this point. And then this is October 2011. So the last time gold got to this point is 2011. It's a very long time. This is 2010, 11, thereabout. So gold has only reached this region like once, and there's a resistance around here. So the sentiment around gold is still a buy sentiment fundamentally, except maybe we have some calm happening globally. If things are still not stable globally, we still have issues around, then gold's sentiment will be up, and it will try to test this high. It will try to test to see if it will break this high of 1008. It has only gotten to 1008 once, and it got to the highs of 1826. In fact, it touched 1009. This candle, if you check the shadow there, this is the high. So it touched 1900. It's $1 per ounce around 2011 before it came down, and then it picked up, and then it's around 1788 right now. So gold is trending up. So if calm does not happen soon, it will try to test first of all 1008 region. Then if it succeeds in breaking it's close to 1008 already. If it succeeds in breaking that, then it tries to test 1009. But if we have calm, like maybe a vaccine or something happening around and everybody is okay, we have gold coming down, the price would come down. So if you are looking to trade gold, what you should be looking for is retracement. If it retraces down, then you look for a place to come in from. So if we go back, that's a monthly chart to show us the trend, to show us a broad view. The longer time frame gives us a broad view of the trend, what's been happening. The lower time frame will now give you entry points. So if you check these points here, without much analysis, you can see that there's a kind of support around here. Prices went up, it got to this point, and there's a kind of region here that it was a kind of resistance, then it broke it. Now, if you have resistance here, any resistance point, if it's broken, that point becomes a support. So if gold price comes to this region, back to this region, for any reason, if it retraces, because there's always retracement. If an instrument or currency or trend, if it's going in a particular direction, maybe buy or sell, it usually comes like it retraces to gain momentum, then it comes back up. So it's not impossible for gold to find retracement down above. But what you should be looking for at this point is retracement to buy. Retracement to buy, not really looking so much on the strong sell at this point for gold, because fundamentals still support the rise of gold so far. So we would leave it there for today. We are going to continue again on Friday. I would ask us all to unmute at this point. If you have comments or questions, you can actually voice out. And then every time we meet, we are going to be sharing from different perspectives. So it's going to be something new. There's a lot to get to learn. It's really there's really so much. But as much as possible, we are going to keep opening up different aspects of trading, different aspects of analysis, what we need to know, what we can do, and all of that. And I want us to practice and give me feedback. All right.